Welcome to the PMS and AIF review series by AltAccess. I'm Yogesh, founder and CEO of AltAccess and an ex-equity research analyst at Goldman Sachs. Today, I'm walking through an independent review of the ICICI Prudential Value PMS. Just to be very clear, this review is not sponsored by anyone. It's an honest, unbiased assessment of the fund. At AltAccess, our job is simple. We identify PMS strategies that not only outperform their benchmarks in the past, but have the highest probability of continuing that outperformance going forward. To do this, we follow a rigorous 30-point proprietary checklist that deeply analyzes the fund manager, past performance, investment philosophy, and risk metrics. If you're currently exploring a PMS or an AIF and want data-backed, unbiased view before investing, book a call using the link in the description. With that said, let's dive straight into the fund review. Let's begin with the investment style of the fund. ICICI Prudential Value PMS follows a value investing strategy with a flexi-cap approach. As you can see on this slide, nearly 50% of the portfolio is allocated in large cap stocks, with the remaining exposure split across mid caps at around 12% and small caps at roughly 30%. Even the large caps they buy are not generic. These are companies that are going through some kind of transition and are therefore undervalued by the broader market. Now, here's the real beauty of this fund. Despite having a 50% allocation to large caps, the fund's return have been comparative to small cap focused PMS strategies. This significantly improves the risk reward profile, making it far superior to pure small cap funds which carry much higher volatility. In terms of performance, the fund has delivered a 3-year CAGR of approximately 30% compared to 16% for the BSE 500. Over a 5-year period, it has generated a CAGR of around 29% compared to 21% of the index. This is the kind of consistent alpha generation we look before recommending any PMS. That said, past performance is not a guarantee of future returns, but it serves as a strong indicator of the future alpha generation by the fund. One of the strongest reasons ICICI Value PMS continues to outperform is the depth of its investment team. The strategy is overseen by Anand Shah, one of India's most respected PMS CIOs with over 2 decades of experience. He is supported by a full institutional research setup, over 20 analysts covering hundreds of companies. Now, let me walk you through the investment framework of the fund. Their philosophy is simple. They look for good businesses with a sustainable competitive advantage run by strong management, and those businesses are available at reasonable valuations. They are able to buy strong businesses at reasonable valuations because at times quality companies are ignored by the market when they are going through a transition phase. In the following slides, we'll walk you through some of the investments. Let's look at real proof of execution. This investment in Karur Vysya Bank made by the team is a great example. The PMS identified improving fundamentals early, strong loan growth, deposits crossing 1 lakh crore, and ROE improving sharply from 5% to 16%. This is a classic value re-rating story, an undervalued stock, improving profitability, and strong management execution. The PMS captured this opportunity well before the market priced it in. The stock is up 3x in the last 3 years. Putting it all together, ICICI Prudential Value PMS demonstrates the traits of a fund built on strong investment principles and institutional discipline. To summarize, a long track record of consistently beating benchmarks, a deep institutional quality research team, a disciplined, repeatable investment process, and multiple real-world success stories that validate the framework. That is why ICICI Prudential Value PMS features an AltAccess recommended list for long-term wealth compounding. That said, every investment strategy has a different investor profile. To understand which PMS is the right fit for you, book a call with us through our website today.